Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. And joining us for the segment, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss monthly index performance for the month of April. And Mark, I mean, there's really not too much to say here, with the exception, as we can see on your first chart here, that it was a tough one across the board.
Yeah, certainly, Joe. And I'm wearing a green shirt today to kind of will the green back into the market, I guess. Yeah, this first slide kind of tells you all the headlines you need to know. Is that especially in the US versus the rest of the world, market weakness was very pronounced in April. For the Nasdaq 100, the Nasdaq Composite, we had the worst single month of performance since 2008, which in and of itself says a lot, right? And this is now kind of dragging on to the fifth month of corrective territory year to date. You can see the Nasdaq 100 X Tech is kind of the only index on the left hand of the screen that is better than down 10%. Not a huge surprise. Those other names of the Nasdaq 100 outside of tech that tend to be a little bit more value oriented just didn't have as bad of a month, but pretty much all up and down the line, growth and small caps fared the worst, and especially US versus rest of the world fared the worst. A lot of that driven by weakness in tech.
Right. And if we take a look at the next slide here, when we're looking at green energy, the Nordics and dividend and income indexes, I think we saw a slight positive with Helsinki and the Nordic markets. Perhaps, Mark, they have some energy exposure there. It's the only thing I could think of.
Yeah. I mean, I think that's part of the story in places like Europe, is that there are a lot more cyclicals. There is a lot more value exposure there on a sector basis. I mean, when you talk about, clean energy and green tech, those areas were outperforming really, really strongly for the last couple of years, even before the pandemic, but especially during the pandemic, all of them getting hit pretty hard. On the right-hand side of the screen, you can see those declines in the income suite of indexes that we highlight here, whether it's buyback, whether it's dividend achievers or multi-asset income, quite a bit less pronounced, right? But still, broad-based weakness. Dividend accelerator here down 2.8% is really kind of the only area within traditional equities, at least in the US, that you were close to breaking even.
Right. And Mark, moving along here, if we look at the next chart, the one thing that stands out to me is the Nasdaq Dorsey Wright Dolly Index up just over 2%. If I remember correctly, that is the one that uses their momentum indicators. Is that correct?
So Dorsey Wright, that whole suite tends to be very momentum driven. Dolly is an interesting product in the sense that it's a tactical asset class based strategy. So it'll select between things like equities and commodities and kind of just go all in. Guess what it went all in on this year? A commodity broad-based exposure. That's why that's the product that's up as the pretty much the only one so far that we've covered and will cover in this entire presentation of about 100 different indexes. I do want to point your attention though, to the top of that chart. The Dorsey Wright Energy Tech Leaders was down only 1.6%. Still a loss, but that index has really outperformed, up about 37% year to date through end of April. On a price return basis. We've got other products in the energy index space within NASDAQ, like the NASDAQ Smart Oil and Gas Index, ticker NQSSOG, that have also been doing really well year to date, despite, kind of occasional pullbacks, because they're trying to give you that added kind of factor-based exposure to energy, whether it is momentum driven like Dorsey Wright, or in the case of that Smart Oil and Gas Index, it's kind of a multi-factor weighting approach. It's got value, it's got growth, it's got low vol, going in there to kind of help you get the right exposure to energy, which continues to outperform. And we really don't see an indicator yet that that's going to start cooling off anytime soon.
And finally, when we take a look at the thematic and tech leaning indexes, while innovative, that was the sector that it couldn't get out of its own way.
Yeah. I mean, thematic has been so heavily exposed to tech, just kind of getting you exposure to different subsectors, different themes within tech itself, like cyber, like cloud computing. I mean, these have been the best performing areas for many years. So it's not in one sense a surprise that when the broad market X energy is having a lot of weakness, these are the areas that are falling the hardest and the fastest. You can see the one, exception to this is the China US Internet Tiger Index. That one was down by far the least. Guess what? China sustained a lot of pain before US tech started to, given all of their issues that came to the fore last year. So, I mean, look, I think the highlight from this is that this is not a this is not solely a blow up of tech. This is a broad-based market decline across all sorts of equities, especially anything that is in the growth space, excluding things that are exposed to energy and especially oil and gas equities like that. My hope is that we are getting closer to the end of this correction because, as we talked about, for example, with the Nasdaq 100 recently, so many individual company valuations are back down to where they were pre-pandemic. So you should start to see a lot more kind of disciplined bottom feeders start to come into the market, pick up those names that have been punished unfairly or overly punished, along with the rest of the market where, again, as soon as we get more certainty with respect to inflation, geopolitics, and interest rates, you should start to see the market stabilize a bit.
Yep, great point, Mark. I've been using your example, Micron, from last week with that low multiple and the growth opportunity there. So we've been using that in a number of our interviews. We appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.